good morning, good afternoon, good evening, wherever you might be listening in from. I see we have a large crowd here, so that is awesome. Um, my goal here is to spend probably about an hour, give or take. If I have to answer questions after this presentation, I don't mind doing so. But that's kind of like what our game plan would be for today. Um, and quite frankly, if anybody has any questions on any things that I covered today, please feel free to ask those questions. If I feel like it's out of the scope of today's, I'll let you know. But the only thing I ask is be nice. I understand that trading for everybody is different. So in the event that what I talk about or what I do is not necessarily your style, totally get it, no problem. But my goal is to be able to help you at least see how I approach the stock market and hopefully be able to guide you along the way. Okay. For those who might not know who I am, let me just start by introducing myself. Again, my name is Wally Olopade. I have been trading the stock market since 2016. I'm sorry, 2012. 2016 is when I really finally figured out how to really successfully trade the stock market. But I started in 2012, made a lot of mistakes, and now I've got to the point where I have been able to pick tops and bottoms in the market consistently. I can tell you when the market is ready to go higher. I can tell you when the market is not ready to go higher. I can tell you when the market is ready to drop. In fact, last year, at the beginning of last year, when the market was ready to start dropping, the bear market that we experienced, I warned people about it and so on and so forth. And now, since November, I've been telling people we're back into a bull market. Even though it's a slow start, but the bull market is back. And so we are no longer bearish in the market. And I know a lot of people are still asking that question. Are we still bullish? Are we still bearish? And hopefully I can show you one tool. Like it's a very simple tool that I use to kind of help me see yes or no. It's a very simple yes or no question. And so hopefully today I'll be able to share that with you so you can see it too as well. And one of the things I also say is that you don't have to take my word for it. Honestly, just listen to the things that I'm sharing and then go back and do some research on it yourself and see how it plays out. But I spent a lot of years studying technical analysis. My background was actually in finance. I studied accounting in college, and I took that understanding of fundamental analysis in the sense of financial statement analysis. It's what I was really good at, and use that to kind of determine what's a good company from a bad company, et cetera, et cetera, et cetera. And then I said, how does that play out? What does that picture look like on a chart of the same stock? So, you talk about the P ratios, the all kinds of different ratios that people talk about. But when you take all that information together, you say, okay, based on all this information, what is it telling me about this company? Is it a good company to buy? Should I be buying now? Should I not be buying now? That's kind of like what I did, is take that knowledge and see what it looks like in a graphical pattern. And from that point on, I was able to start merging technical analysis with fundamental analysis and use that to, again, tell tops and bottoms over and over and over again. Okay, so some of these notable calls that I made, like I said, the cryptocurrency crash of last year, right before it started in January, I even have a YouTube video that anybody can go see on my YouTube channel when I was telling people, hey, crypto is going to crash, something big is about to happen in cryptos. The top in the market in 2020, the pandemic, about I want to say 2 to 4 weeks before the pandemic actually occurred. And I need to paraphrase that so that I'm not, for those who might be very technical about things. But at the time, we didn't know that it was going to be a pandemic. So this is back in January of 2020. People didn't know we were going into a pandemic, but the notion of this whole COVID-19 was already picking up. People were not sure how it was going to affect the market and everything. But in January 2020, we saw the signs saying, hey, the market seems to drop. At the time, I didn't know that it was actually going to be related to COVID, but I knew something bad was going to happen. And so I warned people about it. And I'll show you some examples of how I was able to show people that. And then we saw it. We warned people. They got out. When the market hit bottom in March of 2020, we warned them about, hey, the market is at bottom. The bull market is here. Just like I'm telling people now, the bull market is here again, regardless of what the media is trying to say, and so on and so forth. So we have been able to do this consistently. This is the report that I usually write every weekend. I write this report, and this is when I was telling people about the market getting ready to drop before the pandemic. And one of the things I'd like to highlight is if you see right here in these reds where it said the writing is already on the wall. It is time to take profit, exit your position. The market is wanting us to take heed. And you can see this is when we wrote this on January 24, 2020. So again, this is prior to the actual COVID situation taking place. So we saw this and we knew there's something wrong. Something was wrong in the market. All we knew was like, get out, get out, get out. And the severity of how we wrote this was like, it's not one of those like, oh, let's wait and see what happens. It's like, no, the writing's on the wall. Take your profit, get out. The market is warning us, get out of this market. And so hopefully you'll be able to see and learn how to do the same thing too as well. Let's see here. Here is the bottom. So you can see March 27 in that same report, just about 2 months later, we said, hey, it is time to cover all our short positions, exit your short, the market, and get ready for a rally. So this was again where people were still questioning because at this point, you got to understand we were in the thick, like in the beginning, I should say, but very serious beginning of COVID-19. And a lot of companies were shut down, a lot of stores, a lot of businesses. I mean, everything, the whole world was shut down. And, a lot of people were focusing on the economic data and unemployment rates and all this kind of stuff, but we were looking at this and saying something is showing that money is beginning to flow back into the market. And we saw these things and say, hey, it's time to get back into the market, cover your short, no more shorted, market's ready to go higher. And lo and behold, that's exactly what happened. The Bitcoin crash of 2022, which was last year, this is the same report in 2022 when we said Bitcoin has displayed major topping patterns. Bitcoin is going to suffer for the next 4 to 9 months. How did we know this? This is all because we've learned how to see what the charts are communicating. This is a recording that I did on YouTube. You can still go back there, recorded on January 11th, because at that time, so many people were focused on the fact that cryptocurrencies was the new thing. And if you were to tell anybody it was going to crash, they would tell you you didn't know what you were talking about. So here I was coming out telling people something is wrong with Bitcoin. And I said, if it's happened to Bitcoin, it's going to happen to, the rest of the crypto market. And people are like, you don't know what you're talking about. You don't know what you're talking about. Well, now we can all see how much has happened in the Bitcoin world. A lot of people were predicting it was going to go to 100,000 at that time. Well, it didn't. It went lower. And I think the lowest it went was 15,000, maybe something like that. But again, we saw the warning signs. And this is why I'm very famous for saying the stock market is not random. The thing is, we got to learn how to tell what the market is communicating to us. Okay. Um, this is just a little bit more, same story, just different situations. Again, just proving the fact that we don't guess when it comes to the stock market. We see things, we know things, et cetera, et cetera, et cetera. So today, what I wanted to do is, because I know I don't have a lot of time with you guys, and quite frankly, I don't subscribe to this theory that you can learn everything you need to know in a one hour webinar or something like that, right? And so I'm gonna just be upfront with you guys because next Saturday, not this Saturday coming up, but next Saturday, I literally start my 6-week training program, and that's what I want to invite you to. But I'm going to give you guys a summary, a synopsis of what we do and what we cover in that 6 weeks. So that's what today's presentation is going to be about. You will still learn some things because I'm going to show you, some nuggets that we cover in that 6 weeks. But my goal is that at the end of this, presentation today, the end of this webinar today, that you will find that, wow, this is something that you want, and you'll come join us on March 4th. March 4th is when we're going to start. So on March 4th, hopefully you come join us, where we will go for 6 weeks. Every Saturday for 6 weeks, we're going to go and we'll talk about a lot of different things on what you need to know on how to invest in good companies, et cetera, et cetera, et cetera. Okay. So what I'll do is I'll show you a little bit about what we're going to talk about in week 1, and what we're going to talk about in week 2, what we're going to talk about in week 3, and week 4, and so on and so on. All right. With the hopes that, again, you'll see it's like, wow, this is information that could really help you with your investing and your trading all together. Okay. So in week 1, we covered what I consider to be the basics. All right. So in week 1 of this 6-week coaching, which is literally going to start in 2 Saturdays from today. We talk about how can you identify good company and invest in good companies using just technical analysis. Okay, anybody who knows me knows that one of the biggest thing I pride myself in is how I don't have to rely on the media to tell me what's going on with any stock or the market in general. Okay, but you can see with your own two eyes if you understand how to analyze these things. You can analyze it yourself. After all, when you think about all these experts that we listen to, they're just humans like we are, right? And so they had to learn certain things, and based on what they've learned is what they now regurgitate and share with you. Say, hey, based on my knowledge of this is what we expect to happen. And so at the end of the day, all it was like they were not born with this amazing insight. It was just they were taught this thing somehow, some way, whether it was self-taught, whether they went to higher education levels to go learn these things. But the fact is, they learned how to do this. And so this is what I'm trying to help people see. It's like I learned how to do the same thing where now I don't need the experts to tell me what to do. And then hopefully you guys can learn the same thing too, where you don't need me or even the experts to do what you need to do as far as analyzing the market. Okay. And so what we do is we focus on how to identify healthy companies first and making sure that we can get in and know when are these healthy stocks traded at what I consider to be attractive prices. Okay. And that's kind of like what we go into, because my thing is I don't want to be paying high price for any stock. I want to pay low price. But at the same time, when I pay low price, I'm not talking about buying a stock at $1 or buying a stock at $5, because a good company's low price might be 250 bucks, and that's probably the cheapest it would ever be. And so being able to be aware of that and say, wait a second, this $250 is the lowest this stock that you're getting this company at 250 at a bargain. That's really what we're trying to do. So how do we find these bargain companies when those companies are bargain? Because most people make the mistake of thinking a bargain is $5, a bargain is $1. Not necessarily. One of the greatest examples I can give is Tesla in 2019, when I saw that Tesla was trading at a bargain price. Now, this was before they did their stock split. They've done 2 stock splits since then. But if you went back and you looked at Tesla before they did their stock split, the price of Tesla at that time was $350 per share. And I saw it at the time. I was like, oh my goodness, this is a bargain. Like, this is the cheapest Tesla is ever going to be at $350 pre-split. I keep on saying pre-split because now it's splitted and the price is much lower now, or it seems to be. But at that time, back in 2019, before they did their stock split, it was trading for $350. And I said, this is the cheapest you will ever find Tesla shares. And at the time, I remember people say, oh, no, I don't want to buy Tesla. It's $350. I'll wait till the price comes lower. And I said, no, 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 no. This is the best bargain you're ever going to find on Tesla. And so we've done this with many, many companies. And you can see from that point on, Tesla has been going higher and higher and higher. Now, if we did the pre-split, I'm not sure exactly what the price would be, but that would be like maybe like when Tesla was trading for $30 or something like that, today's pre-split price. And I said, this is the lowest you're gonna see Tesla, and then it's gone from $30 all the way to 100 and something, right? It went all the way up to almost 300 bucks. But I remember when I saw that, and I said, 350 is the lowest price you're gonna find Tesla. And people didn't realize that because they were thinking, oh no, 350, I don't want to spend 350, I want to spend $5. And I said, no, 350 is a really, really, really good deal. If you don't buy it now, you're gonna regret it later. And so that's literally what we do is we find good companies, how to tell we can, this is a good company. And it's not by a hunch or anything like, but like how do you use technical analysis? Say, nope, that is a good company. And then be able to buy those companies at the most attractive or discounted price that is offering for probably the next few years. Does that make sense? And then how do you use that to also minimize your risk, making sure that we not get into risky trades? And look, if I get into this company, I don't want to get into a company that seems like it has a good discount and I don't make any profit because it goes sideways for the next 5 years. No, we don't want to get into those kind of companies. And so that's why I said they also have to have good profit potential. And so that's really what we focus on. And once you learn how to identify these over and over and over, and you can see them over and over and over, it's like, wow, why am I investing in anything that is going to be risky will be the thing that you're taught. So we call this the HARP model. That's the model that we follow. We never deviate from this. And I'll show you that in more details on March 4th when we start the 6-week coaching program. You'll learn more about that and how to use a step-by-step process, how to identify them one by one and one. One of the things I like to tell people is like, and this is now me showing you a little bit insight on how this whole HARP concept came about. I started realizing that the structure of a price movement in the stock market, there's a basic structure to it. And what I mean by that is I came from a real estate background before I got into the stock market. And I remember in any real estate company or any real estate property that you looked at, there were basic structures that you could see. Okay, there are always walls. Every real estate property, I don't care whether it's a warehouse, whether it's an apartment complex, whether it's a single family home, whether it's a shopping center, whether it's a skyscraper, they all have these 4 basic structures. They have walls, they have doors, they have windows, and they have roofs. Every single one of them does have that. Maybe a warehouse might not have windows, but they all have roofs, doors, windows, and walls. Okay. So when you think about that, it's like those are the 4 basic structures that every real estate property should have. Then I realized that in the stock market, there's some basic structures that every good company has. And every bad company also have a certain type of structure. Now, when I show this to you, everybody's, oh, I know what that is. But it's interesting how so many people underestimate the power of understanding the structure of what's going on with any particular stock. And the structure that I'm talking about is just what an uptrend looks like and what a downtrend looks like. Okay. And so we all know the classic definition of uptrend: higher highs, higher lows, higher highs, higher lows. The classic definition of a downtrend: lower highs, lower low. Okay. And so my goal is to help us see, wait a second, do you even know what the stock is doing? We never buy stock that's in a downtrend. Okay. Now, however, even though we don't buy a stock that's in a downtrend, I'm talking about the overall downtrend, which is what then tells us this is an unhealthy stock, right? But the idea here is in an uptrend in stock, when is the right time to be buying this so that you can time it correctly? And when I say timing, I'm not talking about like timing tops and bottoms, like they talk about and stuff like that, but making sure that we get into the right companies at the right time so that way, once we buy them, these are companies that we know are going to go higher because the structure of what they look like shows us that, yes, these are companies that are going to go higher. So long story short, we use indicators, and I'm going to show that to you, the exact indicators that we use to, 1, tell whether a company is healthy or not. 2, how can you tell whether we're in a bull market? Like I said earlier today, I said we are, without a question, in a bull market. Like, just as convinced as I was in January of 2022 that we were in a bear market, just as convinced as I was in January of 2020, and I said, hey, the market is heading for a bearish state. And then when it hit bottom, I said, nope, we are at the bottom in 2022, March of 2020, I'm sorry. It's the same thing I'm saying right now. It's like, without a question, we are in a bull market. It's just, it needs time to start rallying. But make no mistake about it, we are in a bull market. So what are the things that we need to see to help us say, this is a bull market, this is a bear market, without ever having to question? Because that's one of the things I always try to encourage people to do is we don't guess, we don't hope, we see, and we know what we're looking at. And so those are kind of things that we do in the 6-week coaching. Once you understand that, you understand what a good company looks like and what a bad company looks like, how to tell if this company is a bullish market or if it's in a bearish market, how to tell whether this is a great time to be buying this because this is the lowest price you'll be able to get the stock for a very long time. And then also understand how much profit you can potentially make. It's like that changes the game completely. Okay. And so here's an example of what you'll see is we will be buying companies somewhere around here that are going to go higher, right? Remember we talked about the structure, higher highs, higher low. So when it pulls back, how can we tell that this is the time to be buying before it starts rallying back up? How can we tell this is a good time to be buying? Because this stock here at $50, if we were looking right here, that was the cheapest price it was going to be for a very long time. right? Then the next cheapest price you would ever find that was around $70, then $80. Now people look at this and say, wait a second, if I'm telling you $80 is the cheapest you will ever find this stock for a very long time to come, you need to load up on this type of stocks right now. Those are kind of things that a lot of people don't understand how to see. And this is what we cover in the first week on showing you very clear indicators that tells you, yep, that is the price. And then the next cheapest price that this stock was trading for was somewhere around $110. And it's like, hey, wait a second, Wally, that's not cheap. It was $50. Now it's at 110. But what I'm saying is that's the cheapest you're gonna see these stocks for a while. And so if you knew that this is where now, if you've ever heard people say, or maybe you said it too before, it's like, man, I wish I had bought this stock when it was at 50. I saw it when it was at $50 and I knew it was going to go higher, but I didn't buy it, right? If you ever had that, I was like, man, when it was at $70, I wanted to buy, or I bought a little bit, then I sold it. He's like, if only I had kept on to these trades, if only I had kept on to it, because if I knew it was going to go higher, well, now you don't ever have to ask yourself or say, make those type of comments again, right? Because now you'll be able to see with the help of indicators that we're going to be sharing with you on these in this 6-week coaching program, you'll be able to see exactly what you look for and say, oh, wait a second, this is a stock that's ready to go higher. This is the cheapest it's ever going to be. And then you'll be able to take advantage of that. Here's another one. Okay, if this stock right here, if you knew that this is when it was time to buy, all these areas right here, these are like the cheapest, you will find companies like this before it goes higher. And yes, if you're wondering, this is stocks like Apple, right? But if this stock was traded at $20 here, and you question whether, and then over here is trading at 40, and then over here is trading at $80 or $60, and over here is trading at $100, and you think to yourself, well, okay, at $80 or $60 over here, well, I would like it to come back down to 20 and I'll stop buying. Not realizing that, wait a second, this is the cheapest discounted price you're going to get on the stock at this stage. And in order for you to see that very clearly, using indicators that's going to guide you and say, yep, no question about it, that is the lowest you're going to see. That is what we help people to learn. So that now when you see the next stock, one of your favorite stocks out there, you don't have to even call me anymore. You don't have to call anybody. You don't have to look at the meeting. You can see with your own two eyes and say, yep, based on these indicators, yeah, that's exactly what it's telling us. That's the lowest. He's like, you know what? If I don't buy this now, I'm going to miss out. And again, that's why I'm saying we are at the beginning of a bull market. And I'm gonna keep on re-emphasizing that. I literally just got one person text me this morning. Hey, are we headed for a bear market? I said, you crazy? What do you mean headed for a bear market? We are in the beginning of a bull market. Okay. And if you don't get in now and start buying some stocks at cheap discounted prices, you are going to miss out. Okay. And here's one other example before we move on. Again, we do this over and over again, knowing that, wait a second, this is a good time to buy. And keep in mind, these are the structures, right? Up, down, up, down, up, down, up, down, up, down, up. That's all we're looking for. But the idea is when the stock goes up, comes down, how do you know this is where you should be buying? Because what we don't want to do, which is another mistake I saw a lot of people do, especially last year with cryptocurrency, is I came down and then say, oh, buy the dip. And I say, I don't believe in buying the dip. You got to buy the turnaround, not the dip. Okay. So I get the idea of what they're trying to do, which is like, oh, buy when prices are low. But we're going to perfect that now. And that's what I help you see in the 6-week coaching is how to perfect that so that now we're not just buying the dip, because what if instead of it going higher, then it continues going lower and lower and people say, buy the dip, buy the dip. Can anybody relate to that? The buy the dip, and it just keeps on going lower and lower and lower. And it's like, man, maybe I should not have bought this dip, right? I will show you how to tell the difference between something like this, which was what killed a lot of people in cryptocurrency, from a stock that goes up, pulls back, and then is getting ready to turn around again. So that you can buy it around here, just like we see here, 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 and say, look, that is the cheapest price. We're going to see these things for a very long time. Buy, buy, buy right now. Okay. So that's what we cover in week one. By the time we're done with week one, module one, which is literally in 2 weeks. By next week, Saturday, you would never have to ask yourself, is this a cheap price on a good, healthy stock or not? Never again. That's my promise to you. You would never have to ask that question again. You'll be able to see it. You'll be able to go back and look at some of the stocks that you've already bought and ask yourself, man, what was I thinking buying this stock? Now I can see the difference between what made me lose money and the ones that I made money on. It's not coincidence, okay? And it's not random. It's being educated and understanding what to look for. Okay, so again, using exact indicators will help you identify the healthy companies from the unhealthy ones, when the stock is ready to turn bullish and when it's ready to turn bearish. Okay, and you get in before it's too late. So that's my whole thing. It's part of the reason why we call our company right side traded, is knowing what's going to happen on the right side of the chart, not in hindsight, but as it's happening. Okay, buying good companies at their lowest price, at the current low price, so that you know if you're buying this now, you can feel good about that, and then estimating your profit potential. Okay. Once we finish that, then we take it a little bit further in week 2. The next Saturday, module 2, this is where we go into full depth about how can you successfully identify when a market is at bottom. So when you go back and you see all these where I was able to, pick tops and bottoms, right? And I was very, very adamant that is the top right there. And I was very, very adamant that is the bottom right there. Now I show you exactly how you can do that yourself. Okay. And this is what we go over in week 2. Okay. In week 2, it's all about identifying bottoms. By the time we're done with week 2, you would have no questions about whether we've seen a bottom. And this is why, again, I keep on going back. I'm telling you, the market has bottomed. All right, the market has bottomed. We're in the beginning of a bull market. There's some there's some traits that takes place. Some of them takes off right away. Others take a little bit slow time. And I'm gonna show you the indicators that tells you, yes, it's going to take a little bit of time before this bottom starts rising, but nevertheless, it's the bottom. And then I'll show you where it's like, yep, it's already rising. Okay, it's already rising, and that's kind of like what you're going to be seeing. All right, Luis, again, the whole lesson today is just give you an insight as to what you're going to be learning about in our 6-week coaching program. Okay, because again, we have the 6-week coaching program. Just kind of giving you a synopsis of what you're going to be learning. Okay, so we go into how to tell when you can use where you can identify tops, where you can identify bottoms. We use a stochastic indicator to do that. I'm going to show you how to use that to help you identify tops and bottoms in the market. And then we go into case studies of Warren Buffett's best investments, okay? And how you can see Warren Buffett buying companies at the bottom. Does that make sense? If you look at this case right here, this is Warren Buffett talking about he bought Apple in 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 January, somewhere between January and March of 2016. At the time they didn't really tell it. We didn't really hear about it until May of 2016. But in May of 2016, they came out and said, "Hey, Warren Buffett just bought Apple," and a lot of people have no ideas like why did he buy Apple at that time. Now I don't even know what Warren Buffett's exact reasons are. Okay, I don't really know, but what I've found is an indicator that helps me see, and again, I'm not saying that this is Warren Buffett's strategy, so please, I don't want you guys to quote me on that, but I did some case studies, and this is what we're going to go over on week 2 of this of this 6-week coaching, where we go into details about if you look at the times and you time when Warren Buffett started buying, you would notice that he typically buys at the bottom. Now, a lot of people know Warren Buffett to do stuff like that, where he always comes in and he buys, when things are cheap. And again, I don't know what his exact strategy is, but with the tools that I'm going to be sharing with you guys, right? The tools that I'm going to be sharing with you guys and showing you how we are able to spot these bottoms, you'll start seeing many examples of literally just going back to Warren Buffett. Okay, when did Warren Buffett buy this company? And you say, wait a second, that was right around when all these tools that we talk about in the 6-week coaching happens as well. And so now again, so this is Apple. Like if you look at Apple post split and everything, $26 over here, you'd be thinking, oh well, is that really a cheap price for Apple? That was this 26 here that ended up going to 58. And this is how I said in that 6 week on week number 2, module 2, we'll go into full details on how you can see this. So that what looks like this, where this is happening, you might be questioning, well, is it going to go lower? Is this just a 1 day bounce? Kind of like how this bounce was up here, right? You saw this bounce up here and then it failed. What if that was the same thing and it's going to fail again? You're going to learn how to identify all that. It's like, wait a second, this right here was not the bottom, but this right here is the bottom. Okay, no guessing, no hoping. This is literally what we spend the majority of week 2 talking about. I will show you examples after example. I'll show you all the indicators that we use in addition to the stochastic. And I was like, you need to know these things. And when you see these things happening, it's like there's no question about it. Market has hit bottom. Okay. When Warren Buffett bought shares of Restoration Hardware, same thing. When he bought that, most people were not aware. This is when he bought this on the left-hand side right here, which corresponded to this right here. And then look at how these come. And then this is where people would then come back and say, wow, Warren Buffett is the Oracle of Omaha, right? Oracle of Omaha. And I'm saying, wait a second, we saw the same thing too. I don't know what his analysis is. I don't know the people that work for him and what their analysis is, but we can see it on the chart. And then I started thinking, I said, well, again, I have a great understanding of how financial statements look like and what's a good company from what's not and what it looks like on a chart. And so now I'm not surprised that, yeah, this is around the time that they'll be buying companies such as these. Does this make sense? And that's exactly what we're going to be going into in week 2. We'll go over so many different examples, not just Warren Buffett's, but other great companies that if you look back now, and this is one of those things where you go back into your own and say, yeah, I can see this stock I did really well in. I can see, you know what? I've got this at the bottom. This one, I didn't do so well. I can see that I bought this at the top. No wonder I didn't do so well in that. All right. And so that's kind of like what we're going to be talking about in week 2 of this 6-week coaching program. Here's the last example I'm going to show here on Warren Buffett when he bought, I think it was Kroger, right? He bought Kroger in 2019. And again, at the time that he bought Kroger, this is what it's looking like. People are saying, hey, was that the bottom? Was this the bottom? Is this the bottom? Being able to differentiate the two and seeing, wait a second, after he bought that, look at what happened to the stock. This is what you're going to be learning. And the beauty of this is, even though Warren Buffett and buy stuff and invest for the long term, you can do this on a daily chart, weekly chart, monthly chart, whatever time frame you want. But knowing when that trend is coming to an end and is ready to start heading higher is a huge, huge thing. After we've understand what market bottoms are all about, we'll go into the next week where we start talking about managing our trades, And in order to do so, I use a tracker which everybody will have access. Everybody that comes to this will have access to this tracker. And what I do with this tracker, let me just show you a great example. Here's a sample of this tracker, right? And these are just all sample stocks that we put in and stuff like that. And one of the biggest things that I noticed that why people struggle to be successful in the stock market is because they're not really tracking how the investment is really doing, okay? And so with this right here, first thing we do is it's very simple. You put in the ticker symbol that you want. You put in the date that you actually traded this. Now you can't use this on a intraday time frame, okay? Because this is more geared for daily, weekly, monthly time frames, right? You put in the stock price that you had, and then usually I say, whatever your goal is. Now, in this case, I just put quarterly goal, but you can change that to whatever your goal time frame is, right? I usually tell people, whatever time frame you want, quarterly, whatever it is. And then you put a percentage that you're looking for. And the whole reason for this is we're trying to force ourselves to say, look, I want a plan on where I want to be XYZ time from today, all right? And that's what this is right here. And so we put in there whatever that percentage is. I try to teach you how to see, okay, be realistic, don't overshoot to the moon and all that kind of stuff, but be realistic. What's the minimum that you're looking for? You put that in there. okay? Then we talk about different type of strategies, which we'll go into details about on the different strategy. We have strategy on stock splits, we have strategies on earnings, we have strategies on absolute bottoms, seasonality. All this kind of stuff is what we go into. And then what your expected duration is and being in that trade, etc. So you fill all that out, which is all the ones in gray. And then the tracker does all the other work for you. And the biggest thing the tracker does for you is it allows you to see whether or not your portfolio is growing the way you anticipated it to do. That's really the biggest thing it's trying to do here. And so you'll see over here, this column right here just tells you how long have you been in a trade. You said you could be in a trade for 600 days or 20 days or 37 days. It kind of lets you know how long have you been in that trade. Now, anything over 90 days, if you've been in something more than 90 days, it would turn into red. And it's just kind of give us an idea. It's like, look, you've been in this trade for 3 months. Are you sure you want to keep on going, or should you be doing something else with it? All right, so that's what this is. But this is where this tracker becomes very, very interesting. Right here, goal tracker, where you should be as of today. So if you've been in this trade for 122 days, right, and you bought this stock at $119, and you said that you wanted to make a 15% return in 3 months, so to speak, or whatever time frame. In this case, we use a quarter in 3 months. Then that means that if you stayed in this trade and you've been in from the time that you got this in October till now, 122 days later, you should be up to 20.33%. And what this does is like it helps us see, okay, this is where I should be if I'm keeping track with my plan that I originally have. And then the next column tells us where are you as of today, okay? And then now you can see, oh, I'm actually doing better. This stock is doing better for me than what I planned for, which is good news, okay? And then what ends up happening is over here where we see, does it meet expectations or not? Our plan here is if it meets expectation, it's very simple. We can see that it's green. It could tell you whether you are overperforming or underperforming, okay? But at the end of the day, the whole goal is, are we doing well or are we not? Patel, yes, like I said, today is just a synopsis of what we're going to be covering in the 6-week coaching. I think I said that in the beginning. I'm not sure if you were here when I first mentioned that in the beginning, okay? But that's what we're going to be trying to do today is just give you a synopsis of here's what we're going to be doing, because I have a 6-week coaching coming up in 2 weeks on March 4th. And so in the beginning, I kind of like mentioned that. I said, hey guys, today's presentation is just about me giving you a synopsis of what we do in our 6-week coaching, so that if you're interested in that, you can come join us. If you're not interested, that's fine. But I mentioned that in the beginning. You must not have been there, okay? And that goes for everybody else too on the call. I understand. Again, my goal is like today is really just give you a synopsis of we have a 6-week coaching where we go into full details on how we do everything that we do. I have that coming up in 2 weeks, okay? I have it coming up in 2 weeks, and I'm saying these are some of the things that you're going to be learning, but we're going into more details of those things on Saturday, which starts on March 4th, okay? And that's what we kind of be doing, all right? So in week 3, we'll be talking about how to use the tracker to kind of like keep track of the things that we're invested in. That's the biggest goal, all right? And you will notice over here, notice like these stocks right here that are all in red is a very quick view of what I can see, right? A very quick view. If I was still in all these trades right here, I can see very clearly, very quickly, which trades are doing well and which ones are not. And one of the things that help us is we use this to kind of tell us, hey, why am I still in a stock where it's already showing 2 reds? Because anytime it shows 2 reds like this, we know that this stock is not meeting our expectations anymore. And so we need to be out of that trade. Now, why is this important? This is important because you can see a stock like this that is showing that you are profitable 5%, or this one's saying that you're profitable 6%. But notice what's happening. Yes, you're profitable 6%, and that might be deceiving because technically speaking, you've been in this trade for 97 days, and based on the goal that you had, you're supposed to be up 16%. But as of right now, you're only up 6%. So what makes it seems like you're making money, right? Because you're up 6%, but it's like you are far behind your goal. And so this is what happens where at the end of the year, people come and say, "Oh, I didn't really make money in the year." And I say, well, chances are is because you either stayed in too long on stocks that you were not supposed to stay in too long. You didn't cut your profits, cut your losses short, right? You let your profits run so high that it gave it all back. And that's what this tracker was meant to do, was to help us avoid having to, get into that type of situation. And so in week 3, we go into full details about how do you track, managing your trades basically, because it's one thing to know how to get into a trade. It's one thing to know how to, but how do you manage so you don't jump out too soon, right? And you don't jump out too late. And that's what we put together why we put together this whole tracker. People come to this, you get this tracker, we'll go into full details on how to use it. Usually when I meet with people and they say, hey, um, uh, uh, my trading is not doing as I wanted it to do. I said, well, show me your tracker. Show me your tracker, and you'll be surprised how many people are like, wow, they didn't even realize that they were just going off of hunches, off of hunches, rather than actually going according to a plan. And so this helps us become more disciplined to stick with our plan. Because again, a stock like this that's up 7%, you would think that's a good, like you're making money. I'm up 7%, but it's actually a bad trade. This trade is not helping you at all because you're supposed to be really up 23%, and now you're only 7. So maybe the stock was even up 50% at one point, and now it's dwindled all the way down to 7%. And I've seen people like, let me hold on, maybe it'll bounce back, maybe it'll bounce back. But it comes a point where you have to start cutting your losses so that way, like when I look at this, all these in red, right? These are stocks that why anybody would be in a trade like these that are down so big, even though some of the checkered with positive, returns right here. But the thing is, these are the trades that are hurting your account. And a lot of people don't understand how that happens. And so we go into full details on how to do this the whole week 3 or module 3 and week 3 of this 6-week coaching. That's what we focus on doing. Okay. All right. Then we go into week 4. This is where it gets really interesting because now this is where we talk about timing the market and also understanding the cycles in market, which is again another thing that I believe a lot of people do not understand. All right. One of the things I always say is that most people think that timing the market is picking tops and bottoms. And I say that's wrong. Timing the market to me is being aware of certain events and staying on the right side of the market during those events. Okay. And so we talk about how the market has certain cycles and times that we should be paying attention. Again, timing is not picking necessarily tops and bottoms, so to speak, but timing is, do you understand when the market has hit the bottom for the quarter? Do you understand when? And when I say once you understand, and once I go in week 4, we start going to time in the market and this market cycles, how to see market cycles. You will literally be able to see, it's like, oh wow, the market is, hasn't made a bottom for the quarter, because every quarter, believe it or not, every quarter there's a low point in that quarter. Because after all, there's always a high, there's a low, there's an open and close. So the market always opens somewhere, it goes high, it goes low, and then it closes somewhere. The problem is most people are not aware of when that low is being set, not in hindsight, but actually when it's happening. And when I was able to figure this out, I was like, goodness gracious, being able to see this and understand, wow, this is the low for the quarter. That plays a huge role in helping you understand when you should be really going into the market, when you should not be going strong in the market. And so when you start seeing these times when the market is establishing these lows for the quarter, it's like you don't want to miss out on those kind of things. Okay, so understanding that every quarter there's got to be a low. Okay, I mean that's just the plain point. It cannot be avoided because every quarterly chart has a high, open, high, low, and close. So every single quarter there's a low and there's a high. Every single quarter. So if you're aware of those things, and if you understood that, and you knew when it was actually beginning to happen, Not in hindsight, but you were anticipating it because you know it's coming. You can see it when it's actually beginning to happen. And you can see, yep, we've just established the low for the quarter. That allows you to like really take advantage of the market. And so in week 4, we go into more details about how you can see this with your own 2 eyes. And this is why I said it takes more than just a 1-day trading to, oh, let me show you one little strategy here and there. When you understand the whole full concept of how the market moves, you can really start putting your strategy to good use how you want. And then there's also in every month, there's some type of reversal. There's a reversal at the top, there's a reversal at the bottom. Understanding when those happen, we like the ones that have the reversal at the bottom, when the market reverses for the bottom of that month. That's very, very important, okay? Because once you understand, hey, the market is about to reverse, this is the bottom for the month, that can help you position yourself on the right side of the market. And then we go into seasonality, which again, if you understand seasonality, you know what I'm talking about. If you don't understand seasonality, it's as simple as this. Think about 1-800-Flowers. Every month of February, it goes up, okay? It can go up, it can go down, but there's always a period of time in the month of February when 1-800-Flowers goes up. And it usually starts towards the end of January going into Valentine's Day. Why? Because it's Valentine's Day in the month of February, right? So what we've done is we've taken this season, understand the seasonality, but then we tweaked it a little bit because we said, look, what if it doesn't happen this year? Last year was one year where 1-800-Flowers didn't go up, maybe because of the whole bear market, but we were able to see that. And so in seasonality, once you understand, hey, here are stocks that have seasonal moves. Um, Nvidia has a seasonal move of always going up towards the end of January. Google always has a seasonal pattern of going up towards the end of January. The overall market, the overall S&P 500 has this seasonal move of bottoming in March. Okay, I always tell people there's 2 times in a year where you do not want to miss out of the the overall market. One is in March. Write that down. One is in March. In March, almost always for the last 10, 20 years, the month of March has always been a point where the market tends to bottom. And here's the interesting thing. The month of February, almost always, like 8 times in the last 10 years, the month of February has always been a down month. And here we are. What has happened in February? I literally warned my students at the beginning of February. I said, look, February, the typical pattern based on seasonality is that the market goes down. Here's what you're going to need to see. Once you start seeing this, you know that the seasonal drop has began. And that's exactly what happened. And I said, don't freak out because you have to expect it. It does this almost every single February for the last 10 years. Once you understand that, let it play itself out. You can either take advantage by shorting the market if you want to, or you can just sit on the sidelines. But here are the signs that you're going to see that tells you it's ready to go down. That's what we talk about in week 4. And then I told him, I said, the cool thing is it would happen. Then it would do whatever it needs to do. It could be a steep drop. It could go sideways. Whatever happens, by March, you will start seeing it bottom out and then start getting ready to head higher. I said, if you don't understand this, this is what we consider to be time in the market. Not because we're picking the exact top and exact bottom, but it's like we understand there's a time in the market when the market tends to come to a bottom and then start rallying. Gold does that a lot. April, May, usually April, May, gold will bottom. You can go back again. You don't even have to take my word for it. Just go back and look at the chart. Somewhere between April and May, gold will tend to hit bottom, and then they start rallying all the way to August. If you understand these things, then it allows you to pick your stocks a whole lot better. And so, me understanding that March and October, I tell people, I say, look, whatever you do, if you do not do anything else in the stock market, even if you don't trade at all in the stock market, you gotta get ready to trade in March and you gotta get ready to trade in October. If that's all you did and you traded those 2 times every year, you will have a better track record than most people will have out there. Does that make sense? And so understanding this is huge. Seasonality to me is like how people trade without it is beyond me. But this has helped us tremendously to stay on the right side of the market. okay? And so here we are now, literally next week, Tuesday is the last week in February. We start March, literally next week, Wednesday, a week from, well, actually, yeah, in less than a week, we start the month of March, okay? If you don't know these things and you start thinking, oh, the market is bearish, it's supposed to drop in February and then bottom out in March. And so now that we're coming towards the end of February, we're heading into March when it typically bottoms out. The whole point now is to try to figure out when in March. Is it early March? Is it mid-March? Is it late March? But sometime in March, you'll start seeing some signs, and this is what we cover in week 4. What are those signs? What are those things that you need to see that's like, yep, it's already happening? So that whether it happens in the first week or the last week in March, we need to be prepared for it, right? And then when we see it, you capitalize on that, regardless of what the media says. And this is what we talk about in week 4. We go into full details about how to see that, and that's how we take advantage of it. That's why, again, we go back to, the report I wrote in March of 2020, even in March of 2020, same thing, hit bottom in March, boom, rallied higher. The market has been doing that 8, 9 times in the last 10 years. Every March, bottoms out, starts rallying higher, okay? And then we go into even details like if it starts and then runs into problem, because it did that last year, where it started running into problems, you'll see the things that you need to see, get out of it, all right? But we go into seasonality, stock splits. How do you invest in stock splits? This is a great opportunity when a company announces a stock split. We go into details about which ones to pay attention to, which ones not to. And the cool thing about it is like we don't have to guess. We don't anticipate, oh, what's it going to do? It's like we can see the things, especially after they make the announcement. So we know they've already made the announcement. We already see that the money's flowing in. These are the ones you want to jump into. If we know they've made the announcement, the money's not flowing into that yet, we can sit on the sideline and just wait. Same thing with earnings. We go into details. Most of the earnings that we do is after the announcement has come out. There's a strategy that we like, especially when they come out with good earnings. They come out with good sales. They come out with good forward guidance, and the stock drops. That's a huge opportunity on stocks that have good earnings, good sales, good forward guidance, but then the stock drops. If you ever wondered why that's happening, we go into details about that in week 4. And then we also talk about dividends. If you're the type of person that loves buying dividends, one of my biggest pet peeves with dividends is people buy dividends on companies that are not doing well. And I said, let's change that around. How about we find good companies doing well and still offering dividends so we can benefit on both sides? And so this is what we cover in week 4, and it spills over into week 5 as well. All right. Here's an example of what I'm talking about. Like every quarter, every single quarter, there's a bottom. How do you know that this is the bottom right here? Here's another bottom that you can catch in the first quarter. Here's the bottom right here. Here's the bottom over here or over here. Every single quarter, there is a bottom that takes place. Here's the bottom that took place here in the fourth quarter there. If you understand this, ladies and gentlemen, okay, and the reason why I even use this, I can show you more and more examples, but for sake of time, I'm just showing you this. 2013 was my worst year in the stock market because I was short in the market, not understanding I had just started. I didn't know anything. Looking back now, I said, man, I wish, like, as much as I traded, I said, if all I did was just trade 1, 2, 3, 4, 5, 6 times in 2023, as opposed to the hundreds and hundreds of trades that I put on, if all I did was just trade these 6 times, but I caught this bottom here, and I caught that bottom there, and I caught this bottom there, and this one, and this one, and this one, wow, my positions would have done so well, my portfolio would have done so well. So ever since 2016, that's all I've been doing. It's making sure, I mean, we still trade all the stuff, but we know, do not miss those bottoms in the quarter, okay? And then lastly, in week 5, we go into IPO stocks, okay? And in IPO stocks, one of my biggest things that I had to do is like, if you've ever seen people say, if you invested $1,000 in Amazon in 1997, here's how much you have now. You ever seen those type of articles? What I thought was very interesting is you will see that article, if you invest, and they put a certain amount in a certain company in a certain time frame, then here's how much you have. You'll see the exact same thing right here. If you invest $1,000, same amount, but this time Dogecoin, and the time frame is different. Here's how. Notice how the template is literally the same template, right? Here's a template if you invested. And then here we go, if you invested, the same template. But every time they write that about another company, in hindsight, it sounds like, wow, they know what they're talking about. But all it really is in hindsight. So that was one of my biggest pet peeve, okay? One of my biggest pet peeve. And in this case, my job was, how do I make sure that I can identify companies that are actually going to do better going forward? How do I know which IPO stocks are actually going to do well? Here's another one. If you invested $1,000 in Bitcoin 5 years ago, see the exact same template. Here's how much you have today. So the question is, how can I tell which ones are actually going to do well from not? And I discovered that. And here's why I say companies that IPOs that would double, triple, quadruple, maybe even quintuple in price is what we discovered, right? So companies like Ferrari that came out on IPO over here and did really, really well. If you look at this, at $60, went all the way up to, like, let's just call it 260 right here. That's 60 to 120. That's 100%. 120. That's 200% that it went up from the time that it went IPO. Okay, and this is what we teach in week 5. Here is Planet Fitness, another company that we traded just like that. You'll see it went IPO somewhere over here around $20, went as high as $100, simply because of the things that I'm going to share with you in week 5 on how to trade IPOs, right? Here's Facebook before it started tanking last year. Prior to tanking last year, at $60 when it first came out, somewhere around there, going up to $380. By the way, it's pulled back enough where it's like, if you don't get into Meta, you're going to be crying, man, I wish I had bought Meta back then. But you see, when you come to the 6-week coaching and I show you, you'll be able to see with your own 2 eyes using the indicators that we go over. Okay. All right. So my time is coming up. I only wanted to spend an hour with you guys, just kind of give you a synopsis of what our coaching session is like. And I encourage you guys to come join us. I'll go into more details. Those of you guys will say, hey, can I, you're going to show me anything? I will show you a whole lot more than you could even bargain for when you come to this 6-week coaching. Okay. It's going to be every Saturday, starting at 10 a.m. Eastern time. It's all recorded. Okay. We go for about 2 hours approximately. All the recording is there. Bring all your questions. This is where we go into full details on every single thing I just covered right now. All right. But go to this link, rightsidetraining.com/training. You can see we offer some discount, I believe, for those. The whole course in itself is about $5,000. Okay, for the 6 weeks. In addition to that, you get access to the platform that we use to help us with analysis as well. You get access to, the investment tracker. You get to come to our weekly webinars that we have where we go into details, analyzing individual stocks. You get access to the report that I send out every single week so you can see which stocks we're talking about. You can read how I see the market. You'll be able to go along and say, okay, this is what I've learned. I can see why they're putting that into real life action right now. Now I understand how to see this on my own. Okay. But you get access to all that kind of stuff too as well for a period of time. But again, it's $5,000 to join us for the 6 weeks. I think right now, if you sign up today or before this weekend is over, you get it for $997. So we cut off of almost $4,000. Just come in. If you can't get it done by the end of this week, then we have it where you can finance it. There's a 3-month financing for like about $1,000 for 3 months. We give you a discount for paying $1,000 for 3 months. If you do 6 months, I think it's like $750 for 6 months. And if you decide, okay, I want to spread it out for 12 months, we even give you 12 months. Like, you'll learn everything you need to know in those 6 months, because I know that by the time you're done, you will know what you need to know. Okay, and you'll be able to start using this to really help you with your trading. And so we do that where it's like $500 a month for 12 months if you want to do that too as well. All right, but at the end of the day, come in there every Saturday. If any of the stuff that I talked about, whether it's seasonality, whether it's post earnings, whether it's understanding good companies from bad companies, understanding bull markets from bear market, understanding how to tell the bottoms. So that, Warren Buffett just announced, that Berkshire Hathaway just bought a new bunch of shares of Apple. Why is he buying now? Whenever you hear these guys saying they bought this, it's like, hey, let me go look at the chart. Is it at the bottom? If it is, why are you not buying it? So again, we don't have to like just buy just because they saying that Warren Buffett bought, but it's like you can buy and then go back and verify that on the chart. It's like, yep, that is the bottom. Let's go ahead and buy. So we go into details about that, the strategies, how to manage, et cetera, et cetera, et cetera. By the time the 6 weeks is over, we like literally six weeks away, maybe 7 because we start in 2 weeks. 7 or 8 weeks away from like really understanding how to see this situation. Active traders saying haven't received a report. Um, Let me see. If you haven't received a report, contact Tanya because if you signed up for that, you should be. I mean, if you like, we just need to make sure that you actually signed up for the report, just making sure, okay? But let her know. Let's say, hey, I signed up with these guys. Am I supposed to be getting the reports? If not, if I am supposed to be getting a report and you didn't receive it, just let her know, okay? Because then she'll correct that in a heartbeat. But if she looks at whatever you signed up for, I'm not sure what exactly you signed up for, but if she looks at it and says, oh yeah, you didn't sign up for this, maybe that's the reason why. I don't know. But just contact Tanya. Email us at info@rightside trading, okay, active trader, and then she should be able to handle that for you, okay. But again, guys, come out to this 6 weeks. I know that again, this is just okay. So you have can you let me know what your name is? I know it just says active trader. Give me your name so I can actually look into that for you too. Active trader. It just says active trader. You could just give me your first name. I can look into that for you. Richard. Okay. All right, Richard. I am going to look into that for you as well. Okay. And I promise you, you will get a response from us today. Does that make sense? I promise you that you'll get a response from us today. Yeah, you're welcome. You're absolutely welcome. Okay. But yeah, guys, 6 weeks for $997 of things that you're going to learn. It's just mind-boggling. Okay, and I go into full details. This is where, and then after that, honestly, anybody that's part of my 6-week coaching, any questions you have, you email me, and we do our best to get back to you, answer those questions, let you know what you need to see. But the one thing you're going to walk away with is you will have a better understanding, without a question, a better understanding of how to see when the market is ready to move. All those tops and bottoms that I called, they were not coincidence. And I always tell people that too. I said, look, it'll be one thing if I did it once or twice and okay, I got lucky. But to be able to do that consistently over and over and over, and with the sheer amount of conviction, it's like, yes, that is the bottom. And no, we're not at the bottom yet. Yes, that is a bear market coming up. No, that's not a bear market coming up. Very, very clear um, um, ability to see that on the charts. I'll be able to show you those things as well. So again, just go to the link, rightsidetrading.com/training. Again, if you sign up by this weekend, you can get it for literally 80% off if you were to do that. Okay, and if not, no worries, you can finance it. And but one thing I'll promise you is that you will learn a lot from it. Any other questions before we go? Thank you so much for your time. I only wanted to spend an hour to kind of give you a synopsis of what the next 6 weeks starting March 4th is going to be like. And I hope that this will help you. Anna, thank you so much for letting me be on the call today. And, I hope that, we can do this again. So thank you.